Warren Buffett has created enormous wealth for Berkshire Hathaway shareholders over the past 58 years. From 1965 to 2023, the profit was 747%. The company's $284 billion stock portfolio is a treasure trove of reliable investment ideas. The three authors of The Motley Fool were asked to highlight outstanding Berkshire shares, which, in their opinion, could be excellent long-term investments. They chose Amazon, Ulta Beauty and Apple. And that's why. Interest in everything related to artificial intelligence (AI) is incredibly high, and Amazon is one of the companies that takes full advantage of what AI has to offer. As the world's leading cloud service provider, it is now benefiting from these expanded investments in AI. In particular, Amazon Web Services offers programmers several solutions for tedious coding tasks to free up time for creative work. Amazon is partnering with AI leaders such as NVIDIA, but is also developing its own AI infrastructure to meet demand. Management said that over the past 18 months, the company has launched more than twice as many AI and machine learning features as all its competitors combined. Amazon uses AI in all of its many business segments, starting with its core e-commerce division. Its treasure trove of data related to consumer preferences and shopping habits can be used to provide customers with more accurate search results and recommendations. The company uses this same data pool to improve its advertising business, which helps advertisers reach customers on the site as well as on the Prime streaming network. Amazon increased revenue by 10% year-on-year in the second quarter and nearly doubled its operating income. Despite this strong performance, Amazon shares fell after the recent earnings report as they fell slightly below analysts' expectations, and the outlook turned out to be weaker than the company expected. The shares have recovered somewhat since then, but they are still trading at a P/E ratio of 43. Which is close to the lowest level in recent years. Amazon shares will continue to rise, which means now is the time to catch them on the way up. One of Berkshire's newest stocks, Ulta Beauty, still looks like a great buy, even after the stock jumped on August 14th, when it first became known that Berkshire had opened a position. In many ways, Ulta Beauty looks like classic Buffett stocks. The company is an industry leader with more than 1,400 stores nationwide, making it the largest retailer of beauty products. Ulta also offers salon services in its stores, stimulating in-store visits and adding a competitive advantage over online stores. However, Ulta has been experiencing difficulties lately, so the shares are trading at a discount compared to the previous peak. Comparable sales fell 2% in the second quarter, and the company lowered its full-year forecast. Nevertheless, there are good reasons to bet on the return of shares, primarily because most of the consumer discretionary goods sector is facing similar difficulties as inflation has forced consumers to cut back on spending. The upcoming interest rate cut should help the company and consumer spending rise. Ulta is also continuing to open new stores, planning to add 60 to 65 this year, which shows its confidence in long-term demand and that there is room for new stores in the market. It also expects to enter the Mexican market next year, potentially paving the way for broader international expansion. In the long term, the company plans to open at least 700 stores in the United States and has entered into a partnership agreement with Target, under which it plans to open 800 outlets in these supermarkets. Ulta is currently trading at a P/E ratio of just 15, which looks like a bargain if the company can return to growth. Assuming she can get back on track, the stock looks like an easy winner here. Buffett has previously stated that Apple is better than any business owned by Berkshire, which explains why he allowed Apple shares to grow to a huge stake worth more than $150 billion by the end of 2023. Even in light of Berkshire's recent sale of part of its huge stake in Apple, Buffett said at this year's annual meeting that Apple is a wonderful business that will likely remain Berkshire's largest investment by the end of the year. Apple's iPhone sales growth has slowed over the past year, which can be explained mainly by weak consumer spending trends. The company has also faced increasing competition in China, but business is doing well elsewhere. It is important to note that the installed base of active devices continues to reach new highs, amounting to more than 2 billion at the beginning of this year. This growth is likely to continue as new Apple products are released, with the Apple Vision Pro headset becoming its newest product line. In the near term, Apple has a great chance to provide shareholders with a profit after the launch of Apple Intelligence. Thanks to the advanced AI features that will appear in the iPhone, Apple can increase its share of the global smartphone market, drive revenue growth and, most importantly, increase margins through higher app sales and subscriptions in its service segment. Overall, Buffett appreciates the brand's stickiness, given that customers are rarely out of reach of their iPhones. In the list of the 500 best brands of brand finance for 2024, it was recognized as the most expensive brand in the world. Investing in strong brands has been a hallmark of Buffett's investment style throughout his career, and the growing value of the brand will ultimately bring profits to shareholders. On our Telegram channel, you will find the main news, an overview of the crypto markets. We regularly monitor coins that can give big excess. Welcome. See you soon, friends.